So you have a trading strategy or model that you like and somewhat understand, but because the markets traded to the downside, you couldn't find any profits buying that week. All you really needed to know was which way price was likely to move for the week to be on the right side of the market. If this is you, you've come to the right channel. So let's open up the charts and decide which side of the market should we be on this week. Welcome back to Profits in Pocket. This is the weekly forecast for the week of September 18th through September 22nd. So before we start knowing where to buy, where to sell, which direction, which side to be on of the market, we first have to look at forexfactory.com. And I come to forexfactory.com just to map out where the high impact news will be for the upcoming week. So you could type that in your browser or you can write it down for when you go do your own weekly forecast. So as we can see, Monday is pretty quiet, and I want to preface this by saying I only trade the euro dollar. I focus on one pair. I find through my years of trading, I done traded up to 20 something pairs at one time, and it's not effective. So 1 to 2 pairs to trade, that's what I recommend. Monday's pretty quiet for the euro or the US dollar. I'm looking for euro or US dollar news. Tuesday, we come down at 8:30. We have medium impact news, which is not a big deal, as building permits in the US. Wednesday, a lot of high impact news, but Wednesday is what we call Fed Day. You have the federal funds rate, OFMC statement, press conference, all that Wednesday evening. And typically during the trading day before that, the markets are pretty quiet. Thursday, we come down and see that 8:30 we have high impact news for the US. And at 10 we have medium impact news. And Friday we end the week off with heavy impact news for the euro during the London session, which I want to say that I do not trade, but if you do trade the London session, be very conscious that we have high impact news 3:15 and 3:30. You have PMIs coming out in the euro. Later that day, towards the London close at 9:45 a.m., we have PMIs in the US. So we have a pretty busy week as far as news go. So let's hop over to the charts. And I also want to say, with that much news, we can expect prices to move, whether it's bullish or bearish, we can expect prices to move. So what I see here is overall, we've been bullish for the past weeks, as you can see. We even broke it a few market structures here. So as you can see here, we've broken market structures here and here. So we definitely have bullish order flow. Now, our low-hanging fruit for this week, an easy target for this week, is for the weekly price to expand up and take out any sell stops resting above this high right here. That's our low-hanging fruit of what we can expect. But most likely, price is not going to open up for the week and run straight up and hit that target. So at the beginning of the week, you can always pretty much, as you can look at most candles, we have bullish candles from here to here. And each week starts off with a retracement. Let me zoom in for you. So you can see, we'll look at this week. We started off with a retracement down, we went up. Retracement down, then we expanded up, and so on and so forth. So we could expect the same thing for the week coming up, even though our target, low hanging fruit target, is up here at the, let's see, let's get that price. Okay, so 105.88 we can expect for the US dollar to rally up and hit that. and you'll get to the US dollar index. Before we get to anything on the euro, we want to know which way that the dollar index is likely to go, as they're inverse correlated, meaning when we're in a bullish trend on a US dollar, we're in a bearish trend on a euro dollar. So that's a big help when analyzing and knowing which side of the market to be on for the week. So as you can see on the US dollar, the dollar's been very, very bullish. We've broken market structure here. We've broken market structure here. And now we're headed towards this high of 105.88. 105.88. And these price points you can write down, or if you're following along with two screens, you have this video up at the same time, you have your charts up. You can go ahead and mark out 105.88. That's our low-hanging fruit target for the week. But before we just think that the market's going to open up and rally straight up, which it could, anything is possible. More than likely, we'll get a retracement before we make an expansion up here. So I'll say that again. More than likely, you'll get some sort of retracement down, even though we're looking bullish for the dollar, before we make our move, our bullish move higher, which will probably even take out the buy side liquidity that's resting above the 105.88 level. And I'll show you that in a little more detail. If you look for 1, 2, 3, 4, 5, 6, 7, 8, for the past 9 weeks, we've been bullish, but every week in the past 9 weeks, before price made his expansion bullish, we had a retracement down. Same thing with this week. If you look at the wicks, we retraced down. Then we made our move up. We retraced down. Then we made our move up, and so on and so forth. Even this week, we had a retracement so deep. If you wasn't in tune, so even this week when we retraced, this was a red candle at one point. If you wasn't in tune with the side of the market, which side of the market to be on, which was bullish, because price was headed up to at least touch this high or take out the buy side liquidity above this high. So you knew you was bullish, but like I said, price like to retrace first. So if you sold here, you would have lost a lot of money not knowing why prices went higher, but it's because price was drawn to this high. Prices draw to where all the liquidity is, where the buy stops at or sell stops at. In this case, we had buy stops up here. So back to the point of a retracement, we can expect that coming into this upcoming week. So overall, our low-hanging fruit, and we're going to keep it as simple as possible. I have a lot of complex things I could add in here as to why, what is what, but to keep it very simple, our low-hanging fruit for this week is to get an expansion up to the 105.88 level on the US dollar index. But first, we got to expect for prices to make our retracement down. So we want to expect that. Price will make a retracement down. So this is something of what we can look for this upcoming week. Retracement down, then an expansion up to either touch this high or wipe out all the stops resting above here, which is buy side liquidity. So let's get in a little more detail. We're going to go to the daily chart, getting a little more detail of what to expect and break that down even more. Now, looking at the daily chart, we can get in a little more detail. So remember on the weekly, we know this is our weekly high of 105. This is our weekly high level of 105.88, which is our low-hanging fruit for the week, which we can expect at some point price to expand to or through this level. But remember, I told you first we can expect a retracement. So where could we retrace to? So I have a few key levels you can either write down or you can pause the video and mark them on your own charts. We have this area here. And if you need the exact coordinates of that area, it's 104.96. And here is 105.08. So somewhere in this area, we can expect a retracement. Now, because we're in a heavy, high impact news week and Wednesday's Fed day, we could probably see a little more volatility than your normal average week. This down close candle, I'm not sure if you're familiar with the order block theory and that type of thing. I won't get too deep into that in this video, but I wouldn't really comfortably, if prices to expand bullish, I don't want to see a close below 104.80 level, which is like the midpoint of this bullish order block. And I won't get into that in this video, what order blocks are, but it's all ICT concepts, very popular, plenty of educational videos on those concepts on YouTube. But I'll mark that out to give you a visual roughly here. Roughly here. I would not want to see price close below here. Typically, like I said, it's high impact news this week. So we could see an expansion down to take out this low. That's another key level. So far you have your key levels here. You have this 104.80 level. You have this 104.96 to 105.08 level. And what could possibly happen? Now remember, we're bullish for the week. We're bullish for the week, but what could possibly happen? We could possibly get an expansion down to take out this low for all the stops resting below this low. So we'll mark that out as well. And then we could see prices proceed to or through the 105.88 level where the buy side liquidity is resting. So that's what I have for the dollar index. We're looking for prices to expand and take out the 105.88 level. And remember, before that happens, we can get a retracement to either this zone here on the daily. Somewhere up in here, we might get support here, or we could just, because of the high impact news, see prices fully take out this low where the sell side liquidity is before making that expansion higher. And that's the dollar index. So now we'll go over to the euro dollar. If we know that the dollar is likely to go higher with first a retracement lower, we just flip that on its head for the euro as it's inversely correlated. We should expect some type of way for the euro dollar to have a slight rally during the week to ultimately make a run lower. So let's hop on over to the euro dollar. Let's go to our weekly chart. And as you can see, pretty much just the dollar index flipped upside down as we had bearish weeks for the past 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks, just like the dollar index had 9 bullish weeks. That's why it's always good to check your dollar index first. It give you such an advantage and such ease when analyzing the euro dollar. Last week, we took out this low. Barely, but it did. Took out that low. Now zoom in a little more. You can see. But it took out all the sell side liquidity resting below that low. But because we expect higher prices on the dollar index, my low-hanging fruit for the euro dollar will be this level right here of 105.16. 105.16. That's the low-hanging fruit for the euro dollar. Before we can expect prices to get there, we might get a retracement up. And I'll go into the daily chart so we can kind of decide what's the key levels we could expect the euro to retrace to before making an expansion move down to the 105.16 level. On the weekly chart, we could see a retracement up before the expansion to go to or through the 105.16 level. And make sure you write these levels down somewhere, whiteboard, notebook, because when we come back to do our recap, we want to see what prices did and get our data and what we did right, what we did wrong. Trading's all about collecting data, seeing what you can work on, what you did right, what you did wrong. And that's how we learn and that's how we grow. Let's go over to the daily chart. Okay. So here's our level that we're expecting prices to expand to at some point this week. But before then, we have some key levels we want to point out. 106.88 to 107.11. That's 106.88 to 107.11. We could get prices to go anywhere in here before making our expansion down to our 105.16 level. So what we can expect is some type of move like so. Price could go here, then price can make a run for the 105.16 level. And in trading, there's no definites in trading. All we can do is make smart, educated guesses based on our own experiences and data. This is generally what we anticipate to see, but because it's a high impact news week, we could very much see prices take out this high. Like we said with the dollar index taking out the low, we could see prices taking out that high, grabbing any buy side liquidity here where stops will be resting. And then we could look for prices to make its run down. So that's also a possibility that could happen. So overall, to recap this, our forecast for the week, we expect some type of bullish move in the euro to start the week to eventually take out the liquidity resting at 105.16. We can get to it or through it with the high impact news week we have coming up. It's Fed Day Wednesday, like I said. We have PMIs coming out. So with that type of volatility, we can expect a lot of price movement in the markets. So mark these key levels out on your charts. You can sit on the sidelines, be patient, or have a demo account where you can practice whatever strategy you have with this to aid that. Retracement top of the week, expansion lower towards the middle to the end of the week. And after that, whatever strategy you have, if you get profits from them moves, once we take out the liquidity there, you can just sit on your hands for the week and be patient into the next setup. So good luck out there this week, traders. And we'll be back with a weekly recap where we'll recap what happened during the week and what opportunities presented itself during this upcoming week. So good luck, be safe, trade smart. Make sure you subscribe to the channel. Leave any questions in the comments section. And together, let's put profits in pocket.